My name is Mark Sewell, and I'm the Assistant Chief Financial Officer for the City of Oxnard. This is the report for City Council on February the 21st, 2023, regarding State Auditors 2021 Fiscal Health Ranking of California Cities. The State of California Audit Office publishes an annual risk assessment on all 482 California cities. The risk assessment attempts to quantify and rank fiscal health based on a number of publicly available financial indicators. Cities considered high risk may be subject to state audits and corrective action plans to the Joint Legislative Audit Committee. The City of Oxnard was again categorized as a moderate risk of financial distress in its most recent report for fiscal year 2021. The City of Oxnard rank when compared to other California cities increased to number 8 in fiscal year 21 from number 49 in fiscal year 2020. This presentation attempts to explain the methodology of the score and to reassure Council and the public that while the city has seen its rank increase, the financial fundamentals for the city are strong and improving. Firstly, we need to consider the state auditor methodology. There are a number of factors that could indicate financial distress. The financial reserves. Does a city have sufficient reserves to cover unexpected costs or shortfalls in revenue? The debt burden. How is the city's level of debt compared to its income? The cash position or liquidity. Is the city able to pay its bills in the coming fiscal year? Revenue trends. Is the city's revenue going down over time? And retirement obligations. Does the city have the ability to pay for retirement benefits it's promised its employees? This methodology is the product of an advisory panel made up of members from Public Policy Institute of California, CalPERS, S&P Global Rating Services, the California Society of Mutual Finance Officers, the League of California Cities, and the University of Washington. The state auditor focuses primarily on the general fund, as this is often the largest fund for a city and is responsible for public safety, public works, recreation, and parks. How does the City of Oxnard fare? Well, the City of Oxnard was ranked number 8 most at risk of financial distress for fiscal year 2021. And as mentioned in the previous slide, this ranking is based on a number of backward-looking factors, including general fund reserves, debt, liquidity, and pension obligations. The table you are seeing shows you how each of these factors is weighted and which score is required to determine a high, moderate, or low risk classification. The bottom half of the table shows you how the City of Oxnard has been scored over the last 5 years. The primary reason for the reduction of ranking from 49 to number 8 is the change in the general fund reserves as indicated by the red box for the fiscal year 2021 score. The overall categorization has remained as moderate risk over that 5-year time period. So it's important to understand the reasons for the change in the ranking and why the City of Oxnard is ranked number 8 most financially at risk. You can see that it's dropped from 49 to number 8, but it is important to remember that the city is not considered at high risk. The score for fiscal 21 is heavily impacted by a one-time adjustment, impacting the general fund reserves and the liquidity. And that was a court-ordered infrastructure use fee liability that was required to be charged to the general fund of $36.5 million in fiscal 2021 in keeping with government accounting standards. Moreover, the risk calculation does not take into account new ongoing revenue, Measure E, 1.5% tax, that commenced in the final quarter of fiscal year 2021, with the full benefit not yet seen in historic financial results. This new tax will greatly improve the general fund reserves, liquidity, and other factors that will see an improvement in the ranking in future years. The following 6 slides speak to the various factors used by the state auditor and explain some rationale for the changes as mentioned previously. General fund reserves. The general fund reserves at the end of fiscal year 21 were reported below policy levels due to the required accounting adjustment recognizing a full $36.5 million IUF judgment. Of that, $5 million was paid in fiscal 21 and $12 million paid in fiscal 22, a further $10 million to be paid in fiscal 23, and the final $9.5 million to be paid in fiscal 24. The city was required to recognize the full $36.5 million in fiscal 21 as per the court order. However, this court order did allow the reimbursement over 4 years. Therefore, the city is able to utilize future revenues in order to make these payments. That nuance is not included in the analysis and therefore the score provided by the state auditor. The chart in the bottom right-hand corner shows a restated fiscal 21 score if the IUF impact were removed from the city's financial results. And you can see the score would be significantly higher for the general fund reserves. Moreover, Measure E, the 1.5% voter-approved tax measure, commenced receipts in April 2021, the final quarter of fiscal 21. This unrestricted revenue source can be used to fund general government, helping the city to provide essential services, deliver capital projects, and rebuild available general fund reserves. A city's debt burden is a financial indicator that is used by the State Auditor's Office when comparing cities. The debt burden, much like with personal finances, is a recognition of how much revenue is brought in to service the debts that are currently in existence. In essence, the ability for the city to pay its debts. In this scenario, it excludes pensions, as that is a separate measure. The chart on the bottom right-hand corner shows that the city's debt burden has been improving as revenues have increased over the years and debt payments have been made. The city issues debt in order to build and maintain critical infrastructure, and that allows the city to spread the cost of capital improvements and maintenance over the life of an asset through debt payments and as a way to achieve intergenerational equity. Matching the cost to taxpayers over the time period the asset will be in use, this score will improve when the city reports its fiscal year 2022 ACFR, as the full year of Measure E tax receipts will enhance the revenue in this ratio. Liquidity is another important measure and represents the ability for the city to pay its bills in the short term. This is calculated as the general fund cash divided by the general fund liabilities. As mentioned previously with regards to general fund reserves, $5 million was paid of the IUF judgment in fiscal 21 with the impact of reducing cash. In addition, the city recognized the liability of a further $31.5 million and increased the liabilities. Therefore, the liquidity ratio was significantly impacted by the IUF ruling. The court order spread the reimbursement over 4 years, as mentioned, and therefore that is not factored into the state auditor calculation, meaning future revenues and not just existing cash can be used to make these payments. Prior to the court order, Oxnard had always had a very healthy cash balance in respect to its liabilities, as the chart in the bottom right-hand corner shows. Clearly, COVID-19 had an impact for the city of Oxnard, as like every other city, but it is the IUF required government accounting standards that has pushed the liquidity, according to the state auditor, to a high risk. Unwinding this would show the city with a score of 8.02, which would be in its low risk category. Revenue trends account for 5 percentage points of the overall score, and they recognize the extent to which the city's revenues are increasing or shrinking over time. The state auditor calculates this as the average annual change over the last 3 years. A score of 3.75 out of 5 is what is required to be considered low risk. The city was scored at 3.25, therefore at moderate risk. Again, however, this does not factor in a full year of Measure E revenues. The City of Oxnard does have strong fundamental revenues from sales and property taxes and does not overly rely upon more consumer discretionary sources of revenue such as transient occupancy tax. Finally, retirement obligations are given a considerable weighting by the state auditors, as this, of course, is a large liability for most municipals across California. The net pension liability, required annual payments to CalPERS, the value of pension assets and liabilities, and the governmental revenues are all factors in determining the risk of financial stress as determined by the state auditors. The city of Oxnard is similar to many long-established full-service cities with large, mature pension plans administered by CalPERS. The city's funded status of 70% in FY21 is in line with most of those other agencies and reflects the challenge of investment returns falling below actuarial assumptions. The city is actively exploring a range of options to mitigate pension risk, but this, of course, is one of the major challenges affecting most California municipalities. So to sum this all up, it is a very challenging task to compare nearly 500 cities and account for all the local nuances within each city. The state auditor risk of financial distress can be a good tool as long as it is used as one of many tools to evaluate the financial performance and position of a municipality. Ranking Oxnard at moderate risk of financial distress does not seem unreasonable. However, financial factors used to generate the final score are heavily impacted by the one-time IUF adjustment, and this does weigh heavily on the overall ranking. Moreover, the analysis does not fully allow for new material revenues, Measure E. Recently, the city has had a ratings upgrade. Standard & Poor's, S&P, have access to all the same data as the state auditors and augment this with additional information provided by staff during presentations to better understand fiscal and operating strategy for the city. S&P upgraded the city's credit rating, which is widely accepted as an indicator of financial risk, as recently as October 2022 on the basis of historic and projected financial information. Therefore, it's fair to say, while the city does face some significant financial challenges, it is well positioned, particularly with the recent passing of Measure E, continued tight cost control, and strategic debt management, to continue to provide essential services and work toward delivery of Council's strategic priorities in the coming years. Staff will be available during the Financing Committee meeting to answer any questions you may have. Many thanks.